Hey, fellow option traders, this is Jeff, and this is a special edition of insurance policies, I guess you might say, that I just put on this afternoon with some deepening concern about the potential of a huge banking crisis coming in the next month or two. I wanted to show you, I'm not going to go into the news part of this or anything else. I just want to talk about another calendar insurance policy that I put on the Qs. First of all, this is interesting here because the message center here says that tonight Don Kaufman presents Withstanding Market Volatility and its impact on your portfolio, happening tonight at 6 p.m. Central Daylight Time in the Swim Lessons chat room. Now this will be archived, and I'm sure that either later tonight or tomorrow you'll be able to watch this, and I plan on taking a peek and see what it is that Don talks about, because I have a lot of respect for that man, and I know that he likes to do calendars for insurance policies as well. So that could be interesting. But as long as I have this up, you can also see that I bought 50 lots of a Q's calendar, which is a July-May calendar at 50 for 9 cents each. So that total trade, and we can look at it here. Let me just bring this over here. Just hang on a second, folks. I wasn't really ready for this. But let's get it on the screen here. Here it is. I bought this calendar. I'll give you the logic behind it in a moment. But I bought this calendar. It cost $450. Plus $125 in transaction fees, because I bought 50 lots. That's 100 contracts. I usually don't trade that big, but the price was right at $575. All right, so we'll take a look at why I did this. Okay, so here's a chart of the Qs. We're zoomed way out. It is a daily chart, 5-year daily chart. So I zoomed way out. So if I zoom in a little bit here, we can take a look at some recent activity here. And in particular today, oops, wrong way. Today's action was a bit disturbing from my perspective, and some other things that I caught in the news today about, I don't know, possible epidemic or whatever of bank failures based on the way that the European Union is talking about handling bailouts of banks. And I mentioned this on a video earlier today and yesterday morning's Daily Scan videos. Alright, so this calendar that I put on, these yellow lines that you see here are my break-evens, and this calendar is good. Well, it's definitely good until May, but I picked May, July so that I could do a roll in June or a roll on weeklies if I needed to, as I wait for this to develop. I might be full of crap here for all I know, but I have a feeling that this is going to develop into something. And it didn't really cost all that much, if you know what I mean. So let's take a look at the risk profile here. Take a look at the risk. I'm going to hit the pause. All right, Mama got that for me. Here it is. This is the trade itself, 9 cents, and these are showing that I do have live 50 lots of this. All right, so let's say that price moves down. Let's go back to the chart. Just to the chart. Okay, so right now I have this historical volatility up here right now, and it's currently at 11. And when it came down into this area in 2 years ago, 2011, spent a lot of time in this particular area here. Historical volatility was at 0.4. Now this number is kind of relative, so what I'm saying is if it's at 11 now, and it could go up to say 0.27 or 0.3, that is like a 200 or 300% increase in volatility. So it's either doubling or tripling the amount of volatility. Whether or not that translates directly into implied volatility increasing that much or not, I don't know. But keep that in mind as we look at this. Go back to the Analyze tab, and we have our little monkey wrench down here, and we click on the monkey wrench, and we'll uncheck that. Alright, now if nothing happens and volatility stays exactly the way that it is right now, and we end up at 50 at expiration in May, well then we made $10,000 on this trade. And like I said, it's only costing, I actually have transaction costs included in here. So it's actually costing, like $450. I think it was $525, wasn't it, with transaction costs? So that's a pretty good gain here. $10,000 on $450 in risk. Not bad. But it's got to move here, so there's a lot of things that could happen between then and now. But if it does make a move in that direction and volatility increases, right now we're looking at an IV of around 27. So really, if it doubles, it would be around 64. Is that right? So that would be an increase of 40 roughly. But if I just take half of that, increase the volatility just 20, look what happens. We end up with a potential of $20,000 if we're at this 50 or anywhere in here during in this time frame. All right, so I'm going to squish this down. I'm going the wrong way here. No, I want to go this way. Sorry about that if you're getting dizzy. So there is a huge potential, and actually if the IV increases, there's no way that you're really not even hardly going to lose any money on this. So that is why I do these calendar insurance policies, and I put this one out there a little bit further in time frame as opposed to the IWM and the SPY insurance policies that I have now. IWM is going to expire at the end of this month, and SPY is going to expire next month, and this one I had set up for May. So I now have 3 insurance policies, downside protection. I expect actually to be collecting on them. Looking at tape action today, entirely possible. So, and looking at news too, and looking at the market being overbought and momentum coming out of almost everything that I look at on the A+ list, it looks like as though we're in for a correction, and I just want to lay the groundwork and be ready for it. So let's go back at the chart again. Again, the break-evens are here on that trade, and the break-even is at 60 and 40. So that's a pretty wide range, even if it just comes down partially into it over the next month or two. We should do pretty well. But if it's moving very rapidly and it's going through it, and it looks like it's going to continue on, I will, when it gets down around 50, you can bet I'm going to be bailing. Now if we move this clock here, let's say it takes a month to get down there. What is today, the 19th? So let's say it takes a month to get down there and it drops 20. We're up $2,400, $2,500 on that. I reset these parameters and go back to today's reality. All right. That's it for this video. It's another insurance policy, and if you like to do calendars for insurance policies, I think this would be a good one to go with. You don't have to do this many lots. Depends on how much money you got and how much money you can afford to lose. You could do 100, you know. I got a pretty good price. It was between the midpoint was 8 cents and the full price, market price was 10 cents. So I set my limit at 9 and I got it for 9. All right, that's it. Again, thanks for watching. Have a great day and happy trading.